Well, back home on the Lal Street, the markets ended in the red with a sharp decline in major indices of over around 1% each. The Sensex, in fact, was down close to around 430 points from the high point of the day, whereas the Nifty failed to reach the 10,700 mark on a closing basis. The broader markets too ended lower, down close to around 2%, underperforming the frontline indices. From the Nifty bank space, there were plenty of culprits out there because that index was down close to around 1.5%. Yes Bank as well as ICICI Bank, both of them ended with deep cuts in yesterday's trading session. Anisha, tell us, the global setup as well is not looking very, very positive. We have a big queue coming in terms of Brexit as well as the FOMC meet. Your reading of the markets today?
Well, yes, there are a lot of cues really that the markets have to really reckon with. First up, as you mentioned, the Nifty is below the 10,700 mark, below the crucial support levels, the 50, 100, 200-day moving average. And Nigel, the Nifty is not even fully telling you what the picture is like in the broader markets, because for the month of January itself, the mid-cap index is down around 7%. Yesterday itself, we saw a cut of around 2% in the mid-cap index, and a lot of individual stocks coming under acute pressure. Pick up something from Adani Group or India Bulls Group, even financials like DHFL, ICICI Bank, they have all seen sizable cuts in a single day itself. However, the picture wasn't as bad if you look at the cash equity markets, because both the FIIs and the DIIs bought in the cash equity market yesterday. So the FIIs, they bought around 220 crores, while the numbers stood at 90 crores for the DIIs. However, talking about today, the positive cue or the perhaps a tad bit of tailwind is of the crude, because that is hovering below the $60 per barrel mark. But that is where the good news ends for the Indian market. Now, as far as the US market is concerned, all the three indices ended in the red. Dow down around 200 points, and S&P and Nasdaq showing a cut of 1%. There, the weakness was triggered by the weak earnings and disappointing guidance that came in from the trade bellwethers like Caterpillar as well as Nvidia, and they are saying that there are macro challenges in China, which is actually leading to this. In fact, talking about China, US has filed a criminal case for extradition of the CFO of Huawei, and that is something that is putting pressure in the US-China trade talk as well, because remember, later this week, the Chinese Vice Premier is expected to visit Washington and take forward the trade negotiations, and that is something that is now keeping the investors worried. Other than that, what is keeping investors worried? Well, it's the busiest week for the S&P 500 in terms of earnings, with over 100 companies reporting numbers. Of course, the FOMC meet is there as well, wherein we'll hear the decision tomorrow. Perhaps a pause is what the street is expecting. Europe across the board was down. Asia this morning is suggesting a cut. In fact, early today, we were seeing a cut of around 1% on the Nikkei, and SGX Nifty had also suggested a start in the back foot. As far as the local cues are concerned, well, all eyes would be on bond, rupee and rate sensitive, because remember, Congress has come out with the proposal of universal basic income, the minimum income guarantee for the poor, and that is something we'll watch out for. And lastly, Nigel, we have been talking about how it's an earnings heavy day. We have 5 Nifty company reporting numbers, and we'll be watching out for that.
Oh, it's a action-packed day today, so we'll keep an eye out on all those. You told us some of those numbers that we're expecting today, some more stocks that we should be focusing on?
Well, from the broader markets, a lot of these important companies will be reporting numbers. So BOB, Bharat Financial, Godrej Consumers, and the list should come up for you on the screen. So a lot of these heavy mid-caps also reporting numbers today. As far as the companies which will be reacting to the numbers, Tata Power is on top of the list. CLSA says that whatever had to go wrong had already gone wrong in Q3. So perhaps it hit bottom, because the profit is down 78%. Coal subsidiaries haven't performed well, as well as Mundra power plant hasn't performed well. So all going wrong for Tata Power today. Bank of India, well, yes, the net loss has expanded to 4,700 crores, but that is not the important cue for the bank today, because the most important bit is coming from a government official, and they told us that the Bank of India net NPA and the capital adequacy ratio now meets the norm to exit the PCA, and that is what will keep the stock in focus today. Other than that, Praj Industries, decent set. The profit came in at 22 crores versus 7 crores last year. CEAT disappointed a tad bit because the numbers are below estimates. It looks like it's been an operationally weak quarter. Shoppers Stop, a decent quarter. The revenue growth is not that strong, just a 4% growth, but the net profit has expanded because of the margin expansion. Persistent System, again, weakness in the numbers, but what will support the stock today is the buyback news. So that was about Persistent. Ramco Cements reported a loss versus profits, so we'll keep an eye out on that. And other than the earnings, there are some fresh news on CCD and Mindtree, When CCD or Cafe Coffee Day has told the IT department that they can attach shares 150 crores from their company rather than Mindtree, and the Mindtree deal is nearing completion, and we might hear something in a week's time itself. So keep an eye out on that. And Nigel, the big thing that we have been talking about for the last couple of days, there is a press conference from Cobra Post today at 3 p.m. talking about some 30,000 crore scam. Everybody is wondering, what is that about?
Well, we'll keep an eye out on all those cues. Thanks so much, Anisha, for joining in and, giving us all those cues.